Well, hey, everybody. I'm really glad that you can join us for one of our lunchtime webinars. I'm very excited for all of us to hear what we're talking about today. I have Rick Burgess from Connect Lending. When I heard about it, I was very excited about it because there's lots of individual lenders out there, hard money, soft money, all different kinds of lenders. And wouldn't it be cool if you could fill out one questionnaire and get them coming to you to lend money instead of you having to spend so much time answering phone calls and filling out multiple applications. So I guess Rick is the one who came up with this idea, so I'm going to turn this conference over to you. It is a CT RIA benefit for you, and we are affiliates of Connect Lending in full disclosure. But if you know me for any length of time, you know that I never become an affiliate of something unless I've checked them out and know that they can deliver what they say they can deliver. So, Rick, take it away.
Well, thanks, Linda. And there's no pressure now. What I wanted to do is I just wanted to show you guys kind of the beginning drop page of where you can find this. So we created this for you, so there's a little bit of a brand for you. What I'll do is I will very quickly go through this, and what you're going to find very simply is I don't want you to spend a lot of time becoming a funding expert. I just want you to go out and rehab more homes. So once you click in and you log in, or it's your first time here, you're going to get to this page, and each one of you is going to see a different thing based on what you guys are doing. So what this is just kind of think of it from your perspective as a CRM of all the deals you have running and where they are. I've actually submitted one already, so we can talk about that in a moment. But when you get to this page, all I really need you to do is remember that new questionnaire in the gray up here is the number one thing you guys need to worry about from the beginning of this process. So if you were to hit new questionnaire, what's going to happen is it's going to start pulling up the beginning of our application page. The first one is all tabular in nature across the top. Very simple to understand. Who are you as a person? It wants to know exactly kind of who you are. Credit score in this instance might not be as important as other business loans we do. But what I will tell you is credit score is something you still want to know what it is. Because if you were going from hard money to a perm financing or something like that, I'm sure everybody on the phone has realized they've got their credit pulled by some banks or credit unions or people, and they found out that they didn't know what they thought they knew. So it's always good to have that. So a valid credit score, you can hit the Verify Now button. It actually will pop open one of our partners that's a free credit score kind of a deal. You don't have to use them. Use anyone you want. Hit the Next button. What you're going to get is you're going to get a business profile now. So business profile very simply is most people that are flipping houses have done so in LLCs, S-Corps, trusts. As soon as you do that, you now become almost non-bankable. And I think everyone on this phone might be shaking their head, or if you find out that I'm lying to you, please let me know who you're banking with. I have plenty of leads for them. But what happens is when you're protecting yourself from a bad economy, as in '08, people started losing everything because their investment real estate started getting hammered. So the new thing is the industry was reinvented, right? Everyone started doing this through shell companies and LLCs and LPs and places like that. Once you go into a bank, they're going to evaluate that structure, not necessarily the property you're looking at. So, and obviously I'm talking in generalities here. There are banks we deal with that love investment real estate. But for the most part, they're looking at the entity, and they're trying to figure out the cash flow of the entity and the viability of the entity. It's hard enough to get a business loan. It's even more difficult to find a bank that likes a business loan into real estate. So when you do your business profile, what we're looking for is the characteristics of your LLC, S-Corp, things like that. Type of business is right here. So once you get down to the bottom, you're going to notice there are some questions we ask. Do you want to improve your personal or your business or establish a business credit profile? These are things that are affiliates of ours that in some cases you might want to have a paid X score. You might want to have someone help you with a credit score. These are just options, and they're yes and no's. Next
Hey, Rick,
tab is
before you
probably,
go,
please.
Rick, sorry, before you go any further, why don't you first explain Connect Lending itself and how it came about and what types of lenders you have on there, just before to give some context
Sure.
for the rest of the application. Thanks.
Sure. So what Connect Lending was? It came from a client request, if you can believe that. I was a financial advisor kind of a guy sitting in an office, and one of my clients came in and he wanted a $2 million loan down the street for his business. And the bank down the street said, I will give you the loan if you bring over your investment assets and deposit them in our bank. So he walked into my office, said he had to move all of his money, and if you think of a $2 million account leaving, and I'm charging that client a fee to manage their money at that time, it was very painful, and I made it my mission to never let that happen again. So this was 5.5 years ago now. I started looking around for alternative lenders that would loan money to my small business clients, and what I found was there was no coherent way to find these people. The small business lending world as it is today, that it's exploded, that didn't exist. Lending Club, Prosper, none of these companies were in existence yet, or if they were in their infancies, as a crowdsource or wherever they were at the time. So what ended up happening is I had a pretty good Rolodex, and I started finding my business owners started coming to me for loans more and more and more rather than to manage their money. And then once a banker or two found out what I was doing, they started giving me their bank declines because they didn't want to lose the client relationship because they couldn't do the loan. I don't know if you guys know this, but if you want a small business loan from a bank, typically they're going to look for the entire relationship. And a banker would like to extricate the loan from the process, but keep the relationship. So I help facilitate that. So that was the genesis of it. Let's move on a year or two down the road. I brought it online almost as a CRM because I was doing so many introductions I couldn't keep track of everything. And so what happened was me and my partner, Fred, said, okay, well, there's got to be a way to automate this a little bit. So we started on the beginning of an algorithm. And an algorithm very simply is you tell me an answer and it leads to a different answer. But put a lot of complexity in place, and now as it sits today, we have about 42 different loan types across all metrics of business lending. We don't do any personal lending because as soon as you step across that line, the rules change. So we are we're a commercial lender only. People ask me what I do. I say I've built Match.com for commercial lending, and that seems to get people into the realm of understanding fairly quickly.
Now, when you say
go ahead.
When you say you have 42 loan types, can you give us some? Because we know about hard money loans, we know about traditional mortgages, but what other types of loan types are you talking about?
Sure. Well, remember the genesis of this was from small business lending, traditional businesses. So if you think about a curve, kind of an a check mark, if you will, at the bottom of that curve, what we do is we do a lot of startup financing for small businesses. What we talk about a lot on the other side of this world, outside of the real estate financing, is the 3 C's. 3 C's very simply means, do you have collateral, do you have a credit score, and do you have cash flow? Those are the 3 things in a broad sense that banks and lenders look for. If you have all 3, and there's a 4th one called chronology because I like 4 C's, but time in business. If you haven't been in business 2 years, if you don't have $250,000 in cash flow and have great credit scores and collateral, no bank wants to touch you. That's just the facts of life these days, and that's why people like me exist. So what we found is in startup financing, I can get you $150,000, $180,000 with a good credit score. That's it, just a good FICO. The higher your credit score, the more lines of credit I can open for you. So why is that important for this phone call? Um, gap financing, hard money finance, hard money lenders still want you to put some money down and then get skin in the game. We can actually help with that revolving line of credit on the first purchase. And it's FICO driven. So if you come to me with no collateral, no cash flow because you're just starting your business, but you have a great credit score, we can usually get you anywhere between $50,000 and $150,000 to that downstroke on that first house. So just keep in mind, that's the beginning of this. And as we go up that food chain, right, the basic premises are the next logical spot is lines of credit, revolving and term lines of credit. Then we go to things like owner-occupied financing. This is for businesses that own the space. We also got pulled in, and you'll find this funny, we got pulled into real estate financing, kicking and screaming, because it's complex. There's a lot of options and there's a lot of structures. But we started building out a fairly large database of those lenders. But then we also get into all the SBA products. We get into all the mezzanine products. So all along that, continuum of loan products, we play now. So then you get into all the different deviations. Commercial real estate, you probably have about 15 to 20 different loan types just in your little space. You start getting into the grades of hard money. And I can tell you, I'll kind of preface this by saying, we have hard money lenders that do 100% financing. You don't need to put anything down, but you have to have a very substantial margin in your project. They're not going to do a margin for 20 grand. They want $40,000, $50,000, $60,000 potential profit. That gives them enough confidence to give you the money to purchase, the money to rehab, and take a healthy interest rate, basically, because you have the margin if you were to mess up. If they need to step in as GA, they'll do that and they'll finish the project because they know it's worth their time. Now, if you put money down and the margins are thinner, then there's different loans that come out. That's when you're talking about your soft money, your traditional hard monies, things like that. So across the entire spectrum of real estate lending, just remember there are plenty of options. Don't go in focused on one option, because then you're only looking at one set of lenders. And your situation might not work for that set of lenders, so you have to be open for options. And I'm sure everyone on this phone that's ever done a deal didn't get it done the way they exactly wanted it done. So I know that for a fact. So what happens now is we've been supporting a lot of RIAs. Connecticut RIA is one of them, but we have about 15 of them around the country now. Some are small, some are large. The ones that I'll tell you that are most successful are the ones that let us help them by saying, okay, everybody on this phone has at least one, if not two or three sources of money. Some of them are very traditional sorts of money. Some of them are personal pools. Some of them are, there's just various places, right? What we've done is we can actually build pools for each RIA. So what that means is, Linda, if you have three lenders that you wanted to offer other people to use, we put them into our platform, and as the people in the RIA are filling out their applications, these lenders are now populating and looking at those loan types. And we give them the first opportunity to close more loans for you. So what you get is you actually get this funding community that's being built around your membership and your successes. So what you get is you might get to the point where asset-based lenders out of New Jersey or someone like that really loves your group because they love what education you're providing. They know they can structure a deal around that education. So you get almost a funding partner, and they constantly are checking back on your loans to find more and more and more because they feel comfortable with you as a group. Every time you find a new pocket of money, you have to re-engage them and become comfortable with them. So the key is, if you guys let us help you organize kind of your back office of money pools, you can create an extraordinarily successful environment where every time you do a deal, you know that 2 or 3 or 4 or 5 of these lenders are going to go in and fight for your loan. That's the best place to be as a borrower. Does that make sense?
So in other words, so what's going to happen now for y'all is being part of CT RIA. If you click on, you go to the place that he just said. You go to CT RIA and you go to the service directory under Investors Corner. You go to the service directory, and then you click on Connect Lending. You're going to get to the questionnaire that Rick was going through. So thanks for the background. I really appreciate it, and I hope this gives you hope, because I think I was told, Rick, that you had a rehabber up in Boston area, and I think you were able to get them like $1 million line of credit because the guy had so much background and he needed money to keep his business going. So you can do those. So whatever needs you specifically have, it's really important in this questionnaire to give a full picture of the type of project that you have and why you need the money, so that the algorithm, as he said, will match you up with the best people. So that's what Rick is explaining how to do it. So, all right, let's go back to the questionnaire then.
Right. So, and then, when you hit the business questions, this is really where the separation between real estate and small business lending happens. So, under loan category, if this is a business loan, it's going to ask you all the business questions of a traditional business. What kind of cash flow you have, what kind of average monthly sales do you have, things like that. For purposes of this call, I want to focus on real estate only. What this application looks like, and I'll kind of go through this step by step. Percentage owner occupied, what this means is it's going to convert it into a business loan if you hit 51% or more. Because really, if the business isn't cash flowing, then you're going to start pulling off lenders that have an interest in this. So we don't do commercial real estate that is primary residence. So you can't kind of fool us by saying you want a commercial flip loan, but you're going to occupy the premises. Everyone on this phone should know that. So I just wanted to make sure for disclosure purposes I tell it. So percent owner occupied, most of the time everyone on this phone is going to be non-owner occupied, which means these are either going to be things you're going to flip out of eventually, quickly or not quickly, or you're going to portfolio these loans. So either way, it's going to come down to the collateral of the property and the cash flow of those renters. So just keep that in mind. Type of real estate loans, and you can kind of see here, we went with some of the larger categories. Everybody has some specific things in there. Please tell us if we're missing something. We absolutely love it when we get feedback from people, because the market and the world does change. And you guys know it first because you're out there in the trenches doing it all day long. So let's just say it's a first mortgage. We're trying to buy something. The property type, very, very generic in nature, because we're going to get more detailed in a little bit here. So let's just say it's a single-family home. Loan purpose, obviously they're very simple, very easy to understand. Renovate or expand, most of the time we're trying to purchase these. Current market value, these are ranges, so let's just pick one. And let me explain what happened just there. When I give you drop-down menus, when the algorithm is working, I cannot match a specific dollar amount with a specific lender that's looking for a range. So everything has to be range-bound to get us into the right place. As soon as we're in the right place, meaning that these lenders are looking for your type of loan type, we convert things into very specific dollar amounts. When you start talking about purchase price, please understand they're really interested in what's the cash outlay that they're going to put up for you, what's the need going to be. As I listened to a few conversations before we started this webinar, you're in a bidding war, you're doing this, you're doing that. Really what we're looking for is accepted offers, so we have hard money or hard fixed dollar amounts. So if you say $250,000 in here, renovation cost, obviously people on this phone know better than anybody. This is going to be a general estimate. I would definitely tell you to estimate on the high end, because you don't want to get caught in a project with not enough money. So if we're talking about a $20,000 rehab cost, and then obviously value after renovation. This is where you're going to start getting lenders that separate based on this information. What I mean by that is if the project doesn't have enough margin, then they're not going to be interested because the collateral isn't there to support it, right? So just be in mind, and I think, Linda, you can tell me better than anybody, you're probably teaching students to look for value and look for something that's going to give you a good return rather than working for nothing, right? You don't want to buy something and put money in and get your money back. You want to do this for a reason. If this is your business, you have to run it like a business, and there's a profit margin to be maintained.
Yeah,
so value after renovation.
The rule of thumb. The rule of thumb, if you haven't been trained yet, is to go no more than 65% of the after repair value, then subtract out the cost of your repairs, and that should be the most that you're putting into the property, unless it's a buy and hold, and then maybe you go up to say 80%. But yeah, this is you're not in the nonprofit business, as Coach Lou would say. So
right. And then these questions are going to lead to percentage down payment. So the down payment percentage is, of the total cost, right? Purchase price plus renovation cost. How much money do you have to put down into this? This is going to start separating hard money lenders from traditional lenders from other pools of assets that are looking specifically for, do you have skin in the game? What I'll tell you is this. The less the down payment, the higher the interest rate and the shorter the time frame. I think that's a very easy rule of thumb to understand. One or two of my lenders that are very, very big cash pools have very simple criteria. If you match their margin requirements, they'll look at you very simply and say, we'll do 100% purchase, 100% of renovation, and we'll do a very simple interest deal with you. What do I mean by that is, and everyone falls out of their chair when I say this, is we find 24% simple interest loans all the time. And what that means is if you're holding the property for 2 months, you've paid 4% interest. If you hold it for 6 months, it's 12% interest. So these are for people that know what they're doing, and they can evaluate the time of a project, and they can get in and out of them very efficiently. They'll do 100% financing, and they'll close in 48 hours. This is what Linda was referring to at the beginning of this call. By the third project with that lender, they opened them up a $1 million line of credit, so the guy didn't even have to come back and ask anymore. They just said, pull the trigger when you want to. The moment that money comes out, the ticker started. He paid the interest, a part of his process. So what we're trying to get you to understand is your type of business is going to appeal to a certain type of lender. And all we really want to do is get you that lender repeatedly over and over and over again to repeat your business. If you can come up with a blueprint that makes money, is easily financed, and you can repeat it, rinse, repeat, you will be extraordinarily successful as a, I don't want to say slumlord, but we have people that buy certain things in downtown areas, and they've made it such a simple process. They're doing 2, 3, 4, 5 purchases a week. And now they have 40, 50 pieces of property under them, and this is just a simple line of credit for them nowadays. So very understand, percentage down payment, please let us know what that is. Then we get into what type of collateral are we talking about if it's not cash. Do you have second property, third property? Do you have primary residence? What are you putting up as collateral if it's not cash or whatever? And then please tell us where this property is, so that most of my lenders are going to go to Zillow, they're going to go to Google Maps, they're going to hit some regional things, or hard money guys will drive past the property. If they're local, they're going to want to do some research on the property long before they call you. Additional info, tell us what's going on if you're buying it out of bankruptcy, tell us the story, right? Next page is very simple. Kind of line it all up. Give us an entire amount of financing. Give us an entire amount of how fast you need it. Is this a project you're looking at, or is this a project that you need now? That drives a lot. And then this is kind of a throwback of our business platform. So here's all of our equipment lending loans. Here's our collateralized loans. Real estate lending right in the middle. Most of you are going to be one of these 4 or 5 beginning ones right here. So investment property 1 to 4. Is it going to be 5 or more units? Hard money is there. So if you know what you're looking for, This is a very easy way to do it. What I will tell you is in the next probably 30 to 60 days, this is going to convert into what you qualify for rather than giving you the option. Because what we've done is we've kind of finished out a piece of our algorithm. So in real time, we're scrubbing our database so that when you hit this page, you already know whether you're going to qualify or not, and you know who you should be talking to. It's just taken some time to build all of it and get to that point. Once you pick something, you go to the next page. This additional info is very simply a kind of regurgitation of what you did. You can cut and paste it over, or you can just tell us, hey, this is my 4th flip, this is my 9th flip, this is a portfolio. It's kind of another way to tell your story a little bit more. And then this is what the last thing I'll share with you, and it's kind of the important one if you reflect back to what we were just talking about. If you don't select anything here, local and national database means you're going to hit anything that you have in your personal database as Connecticut RIA, and then you're going to go into my 3,800 lender database behind it. So the stepping stones very simply are we're always going to look for your local organization lenders first. Then we're going to go to my national database second. So after this phone call, I'll gladly do Q&A, but just remember, building that local database of lenders that are in your community actively lending helps everybody in your community and everybody in your lender pool. So please remember, this is something that we ask you to do. You don't have to do it. Some people love keeping their trade secrets a secret. But again, if you find pockets of money, we love to learn about them because you're not only helping yourself but also your rehab community around you. So if you were to find a lender you really do like, you can actually click on assignment, and you can go and pick a lender that you like. So this would only be lenders in your local database. If you know the lender you want to send it to, over and over and over again, you can pick them and send it to them. So at this point, we'll keep it local for you. The next page, very simply, it's a summation of everything. Submit is blacked out because we don't have everything answered. The little red bubbles tell you where the problems are. That is how fast you can submit a loan application on our system. I will tell you this. Once you hit the submit button, we've had people get called in 5 minutes. We've gotten people called in an hour or two. What we usually tell people is give it 24 hours. If it's a weekend, let us get through Monday. These lenders are actively looking for loans, but they don't sit on their computers on a Saturday afternoon. So just remember that. Once you get through that, this is what it turns into. So I've done one already. I'll show you it. Once you submit a loan, you as the borrower can come back into your screen, and as my lenders are coming through, calling you, updating stuff, all your projects you'll start seeing these green lines move along. So lender review means a lender is in there, they've taken the loan and they're looking at it. Once they've contacted you, once they're in info gathering, it'll sit in underwriting, loan offers will be made, a funding button will appear once funding offer is made, and it will be closed out as funded. So everything in here, and we'll have notes in here and we have other things in here. What I want you to understand is if you have one project or 50 projects running, you can come into here and you can see where every one of them is at any given time. You guys probably have your own way of tracking stuff. This is a way of tracking many, many lenders touching many, many projects all at the same time. That is pretty much the end of our training. I make it very short, very sweet. We've built this to be extraordinarily user-friendly. We love feedback. Linda, I would love any questions if you want to open it up, if you want to have them type them in, whatever, or you have any.
So go ahead and type in any questions, and if you don't see the box, just send me an email real quick to linda@ctria.com. But so the moral of the story is be as specific as you possibly can, and then leave your phones open, because you'll get up to 3 offers, and usually within an hour. Usually happens pretty quick. So you want to make sure, some people don't like to answer phones if it's from some strange area code because they're afraid of telemarketing. But in this case, you got to open up the phone and talk to people, correct?
Absolutely. So what I'll tell you is some of our more aggressive lenders are coming out of California. There are some very, very heavy pools of money out there that have turned their attention to real estate. We also have some very interesting people coming out of New York. Again, large pools of money. And strangely enough, we have a very large Chinese pool of money. So if you get this really, really weird unrestricted number of some sort, these people have about $4 billion in cash they're looking to deploy. So they're looking for real, they're looking for real projects, and the amount of money does not matter. I will tell you this: it's harder to get a $25,000 or $50,000 house done than it is a $500,000 or more, right? You guys know that. Lenders want to deploy capital. They want to go in and they want to work on a file, but they want to work on one where they're going to make money rather than $13. They want to make $1,300 or $13,000. Just kind of give you a general framework. The bigger the deals are, the more attention you're going to get, and the faster the process is going to take.
Cool. So you may want to say in your application, look, I'm planning to do 4 rehabs this year. This is the first project I'm working on, or I'm looking to acquire a portfolio of rental units, so you're giving a full picture on all this. So cool.
Correct.
All right, good. And then just to remind folks to how you get to the place is to if you go into ctria.com. Now our website is changing within the next couple weeks, so it'll be a little bit easier to get to the service directory. But right now you're going to click on the Investors Corner, and you click on Service Directory, and then Connect Lending is listed under the hard money lenders. And there's a link right there. If you do have trouble filling out the application or something, there is an email address. You actually end up getting me. And then, but they really have great customer service at Connect Lending. I've also asked Connect Lending to, Cindy in particular, I think, to follow up with some of y'all. So if you've already submitted applications or questionnaires and you haven't gotten funded yet, or if you have any questions or concerns about the particular lender, then we definitely want to hear from you, because I really want this to work really, really, really well. Because, as you know, the market is Connecticut is turning around. A lot of states is really hot, and the first one out the door that has the money can get. The early bird gets the worms. All I can say. There is. Let me see. There's. How much is the service? There is no charge for the service. There's no application fee, nothing until you get to the lender. Is that correct, Rick?
That's correct. If you'd like us to charge something, we'll be more than happy to. But no, we actually are a free service. And to answer that next question, we only get paid something when a loan closes, and we get a piece of the origination fee that is already being charged to you.
There you go. And then, is there any restriction on the property location?
No. Because one of our clients is a U.S. government entity. We actually have been opened up in all 50 states and U.S. territories. I'll say the U.S. territories have been a challenge, but I think we've closed loans in 44, 45 of the states now.
Okay. What about international, like India, Europe, or wherever?
We have stayed away from international projects. We have about 15 partners that we have that look at international stuff. I will tell you, if you're going to go down that road, be in the millions, not in the hundreds of thousands, or else you're not even going to get a phone call back.
Gotcha. Okay, good. All right. Cool. Are there any, let's see. Do you loan against commercial, mixed-use, retail, office buildings, et cetera?
Yeah, so what you're going to understand is when you start getting into those sorts of details, make sure you spell those out in the collateral side or in the side where they ask about details of the loan. Make sure the lenders know if you're going to put up collateral that's a mixed use or something like that. Spell it out, give the addresses, say collateral is located at, and give them an idea. Hey, I have, 50 LTV. I have, own it outright. give them an idea of what the conversation is going to be, so when they pick up the phone, they know what they're expecting.
Good. Okay, good. Great. Any other, let me just check my email. Any other questions at all that anybody has? Let's see. Doesn't look like it. Going once, twice. Rick, if they do have questions in general, not about specific applications, but is there a contact person over at Connect Lending that we want to refer people to?
If you guys if you guys are in your porthole, under the help section, there is a email support right here. If you click email support, we actually know who it is that's logging in to the support button, so your email will be there. You can either give us a quick email and we'll reply to you. We try to get to everything within minutes and hours, not days. There's a phone number right here that's our direct dial line, and it will come in and hunt for the next open number and get you to anybody that can answer your question immediately. If not, please leave a message and we'll call you right back.
Wow, that's awesome. And yeah, that's really awesome. And I've found that I've contacted them myself for questions that I've had, and they've been very, very helpful. And as Rick said, if you know of lenders in your particular geographical area that Connect Lending should know about, go ahead and submit them or give me a call and let me know who their contact information is. It helps with everybody. The more people that are borrowing from the same people, the more negotiating power we have on interest rates and terms. So that can help all of you guys. So cool. Rick, any final words on anything?
I just wish you guys all the best of luck, and hopefully we can help you guys be successful in your ventures.
Good. Me too. All right, great. Hey, thank you very much for joining on the call. And if you have any questions at all, just contact membership@ctria.com, and we'll talk to you very soon. All right, have a great day, everybody, and thank you very much, Rick.
Thank you.